Greetings. I am Tom Nash. This is why I'm raising my price target for Tesla. The stock could rise to $450 per share as a result of this. Tom Nash posted this as the first line of a new video on his channel. Following up on a few other ever-read subjects, Tom Nash revealed his target price for Tesla shares. That these estimates are conservative. He set a price of $408 for the bear case. Price is currently at $253 and $914 for the bull case. Tom's 5-year price target is $1,400. He went on to add that the firm as a whole is performing better than ever. The earnings were wonderful, and the margins may have dipped, but the net income and revenue climb. According to the latest numbers from Tesla, which were incredible despite what the mainstream media is trying to tell you, I'm increasing my price target from $1,200 to $1,400 as a result. Tom's 1,400 Tesla share price, the new open source context of target and ARK are two different. It is anticipated that the Tesla model will yield a value per share of $2,000 by 2027, $2,500 per share in the bull market and $1,400 in the bear market. ARK projected a 25 probability that Tesla may be valued $1,400 per share or less, while a bullish scenario had a 25 likelihood that Tesla might be worth $2,500 per share or higher in 2027. According to Tesla's position on the open source approach, the robotaxi business line is estimated to generate 67 to the expected enterprise value and 64 for the expected EBITDA in 2027. CrossArk simulation predicts that in 2027, electric vehicles would account for 47 revenue, but at much lower margins than robotaxis, even in the absence of the entire taxi fleet. Since 2016, Tesla has been developing its whole suite of self-driving software, putting it far ahead of the competition. Tasha Keeney, Director of Institutional Strategies and Investment Analysis at ARK Investments, asserts that Tesla has unparalleled advantages over peers in terms of data and technology. Although as of July 19, Tesla remains the largest holding in the ARK Innovation ETF with an 11.6% weight. Like I said, it is noteworthy that Cathie Wood's ARK Investment Management sold 28,609 shares of the company last month for roughly $8.41 million based on the day's closing price of $293.34 according to Tesla's daily trade disclosure. With a weight of 658, Tesla is now ranked 6th in the ARK Next Generation Internet ETF with a weight of 15.3. Tesla also ranks first for robotics ETF, ARKQ, and ARK Autonomous Technologies. Although the average analyst rating for Tesla stock is buy, there is no denying that ARK is a huge Tesla bull, and its CEO, Cathie Wood, is one of the biggest Tesla bulls of all time. In fact, the company's stock forecasts are more erratic than those of almost any other SP 500 company. This is mostly because to the boom or bust mindset that many people have about the company, which pits long and short-term investors against one another on an ideological level. In the bullish, the price cuts that helped Tesla achieve record deliveries in the second quarter of 2023 and the expectation of record sales in China, according to Reuters, are supporting the belief held by investors and analysts that Tesla will continue to lead the electric vehicle revolution that has finally gained traction. Dan Ives, an analyst at Wedbush Securities, called the price cuts a smart move for Tesla and said they would pay major dividends in the industry, especially for the China market. While pessimistic analysts and investors fear that Tesla won't live up to the hype and will just end up being another production company, bulls on the company also believe it will lead in other green energy fields like solar panels and energy storage devices. Creative and outstanding bears view the company as being excessively subsidized, overpriced, and vulnerable to competition. As you are all aware, competition is getting more intense as one Chinese app manufacturer, BYD, is set to launch a direct competitor to Tesla's Model I under its Denza brand. Although Denza has been operating under the radar for a few years, BYD is eager to showcase its revitalized brand, and the media blitz shows that they believe in the product and plan to maintain pressure on the incumbents. Two, in light of which way the Tesla stock projection will go well, Li, the founder of the China-based consulting organization, sees no auto insights as reported by CNBC, and BYD is not the only formidable rival to Tesla. If the price of Tesla's stock reaches $335 in a year declines to 24.33 cents, or trades in the middle will probably depend on whether investors believe that Tesla's benefits outweigh its risks, or vice versa. And also doesn't help that in late June, Mark Delaney, an analyst at Goldman Sachs, became the third Wall Street analyst to downgrade Tesla in less than a week. Delaney increased Tesla's pricing but downgraded the company to neutral. Goal raised to $248 from $185. Delaney's action is indicative of a recurring factor in the downgrades. It's difficult to picture Tesla stock performing better as the year comes to an end, but we think the stock now more accurately captures our optimistic long-term outlook for the company's growth potential and competitive stance following the significant increase in value this year. Delaney did in a letter to Adam Morgan Stanley. To put it plainly, Jonas did not see this one-on-one rally coming. This is a reasonable position to take after Tesla's shares fell by almost 70 in 22 as a result of Elon Musk's acquisition of a social media company and the EVemaker's market share being lost to rivals. Bulls like managing director Dan Ives of Wedbush Securities, who is once again beating the drum, do, however, provide some support. He went so far as to say that Tesla has a EV castle built right into the company, alluding to revenue generating initiatives like the supercharger network, which currently has partnerships with major rivals like Ford, General Motors, and Rivian. However, it's likely that some analysts are speculating about how long-lasting some of these current growth catalysts will be. While we see why Tesla is receiving a large mention in an AI discourse, Jonas at Morgan Stanley highlighted that the positive stock movement related to I could be problematic. We believe a reversal on this topic is in the area of the non-disprovable bull argument, according to Jonas, even though the market may want to dream autonomous driving and generative are still two completely separate technological disciplines. On the AI theme, we would get ready to wake up to the deafening blare of a car horn. Although we are surprised that the stock has participated in the rally, we think it's wise to move to the sidelines. Barclays analyst Ann Levy agrees with Jonas that the AI narrative has probably been too far priced into Tesla stock. Levy downgraded Tesla to equal weight from overweight in the same month. In light of this, Levy outlined the elements that support Tesla and those that don't in an uncertain future. We've just seen firsthand how Elon Musk's focus makes such a huge difference in the results, according to Ross Gerber, president and CEO of Gerber Kawasaki Inc., who spoke to Yahoo Finance about the recent increase in Tesla's share prices in addition to Musk's undivided attention. These are some bullish ideas that are supporting investor interest in Tesla stock. First, competitive pricing has broadened its appeal to the masses. Secondly, Musk's shift in focus from Twitter back to Tesla has produced positive results in relation to this. Although there is competition, Tesla still dominates the e-vehicle market. And as a result, the company's stock valuation has fallen due to last year's decline in price and rising earnings. However, many people are unaware that Tesla actually operates in three segments: the energy, generation, and storage division, the services division, and the other division, all of which are rapidly expanding. On the other hand, part of the reason Tesla stock can be volatile is that it carries inherent risks, one of which is Musk's acquisition of Twitter. Some people believe he may be too busy to be solely focused on Tesla because of that and SpaceX, his space exploration company. Furthermore, car delivery could not match expectations. This problem isn't unique to Tesla. Rather, it could significantly reduce consumers' purchasing power for the company's more expensive vehicles. Additionally, competition in the electric vehicle market will only intensify due to new regulations requiring the phase out of internal combustion engines, which have encouraged all automakers to produce electric vehicles. Nevertheless, Tesla continues to prosper and maintains its position as the leader in the EV market thus far. Subscribe for more foreign news.